Hi, what's up, guys? Welcome to another before and after with Capital Effects. Right in front of me, we're looking at EURUSD. I identified a long trade setup. I've been waiting for about 3 days for the setup. Today is Wednesday, the 2nd of October, 2019, and I'm gonna run through what I'm seeing for this trade setup. Firstly, uh, this trade setup, I'll be looking at the 4 hour time frame along with the 1 hour time frame for execution. But most of the video will be targeted on the 4 hours. Right, so I identified a head and shoulder pattern. So we have our 4 hour on the right hand side, and then we have our 1 hour on the left hand side. So let me just zoom in on the 4 hours. All right, so this is the 4 hour time frame, and then right in front of me, so this is, we had price riding all the way down for quite some time now. So from the start of 13th September all the way onto the 30th, so half of the month we had price falling right across and had an area of support here to just mark out the area of support, and then we had price extending downwards, creating a divergence. So this is my left shoulder, this is my, we had this morning price create the right shoulder. Right, so I can also use it to check that if, so this is A, B, point C is on 61.8, and then in terms of target, I'm using this peak area as my target, which also forms part of this. So I'm using, let me just draw this clearly for you. So this is the left shoulder. So I'm using that as a target on the, so I'm just going to replicate that on this side. So from this shoulder, upwards. It's actually from here. So from this shoulder here, that's what I'm targeting as a target area. So I waited for this 4 hour close. It actually closed about 10 minutes ago, and I jumped in a bullish, sort of engulfing bullish candle, and also railroad tracks. So I entered right there on the 4 hours, and then I'm targeting that area. Like, at stops are just fairly tight, just below today's low. So I'm risking into about actually, let me just put it up a bit. So in total, I'm risking about 30 pips just from the, just up below the lows. Very tight stop loss. Then in terms of my targets, I'm going 40 pips, giving me of a 1:2.99 risk to reward ratio. So this is a very good trade setup, and also we've seen in the past that head and shoulders really have explosive moves, especially big bullish engulfing candlestick formation, engulfed 1, 2, 4 hour candles, and then we had a nice pullback right back to those lows, right on those of September. So we had a retest then, and we had price going upwards. So I've been patient with this trade setup, waited for 3 days for this trade setup to play out, to form. I jumped onto it, so I will update once the trade setup plays out, but I'm pretty confident of this move. So just wrapping up, risk with the 1:2.99 risk reward ratio, and then with 93 pip target. Right, so thanks so much, guys, for tuning in. I'm going to update once this trade plays out. What's up, guys? Welcome to the before and after capital effects. In this video, I'll be running through the aftershot of the EURUSD setup that we had a look at on the 2nd of October. So today is the 10th of October. So this pair literally played out in 8 days. So it's quite a pretty long time to wait for a trade setup to play out. but in this business we have to exercise a lot of patience to see the rewards come to us. So in the initial setup, in the before shot, we had price when we were taking our trade. We took our trade at the close of this 4-hour railway track candle, this one here. So we had our entries right after that candle close, and then we were targeting this region up here, which was our left shoulder in our inverted head and shoulder pattern. All right, so the trade paid out quite nicely, total of 93 pips, risking a really small stop loss of 31 pips, gaining 93. So the total risk reward ratio was a 1:2.93. And I'm going to take you through the aftershot, what things to look out for, especially holding a trade for this long, because it does take a lot of discipline. It's not easy holding a trade that long, especially if you're just starting out in trading, right? So let me just break this down and just give you some helpful pointers. Let me just remove this. Let me put this aside here. Let me just remove this. All right, so this was what I was explaining in the before shot. This was the start of the left shoulder. So that entire region here was the left shoulder, and then this was our head. This is our head, and then we had our right shoulder here. So let's pull this ray up tool. Okay, so this is what we had. So we had price hitting a nice area of support here on our left shoulder, broke it nicely, came back and retested it here in a form of an RRT candlestick formation, giving us our right shoulder. So we missed our initial trade at the test here, and we waited for price to pull up to give us further signs of reversal. So when this railway track candle formation had formed, we took our trades at the close of this candle here, and then we were aiming for the beginning of the left shoulder. Right, so in terms of trade psychology, let me bring this up here. So in terms of trade psychology, when price was because when price was here, giving us these minor rejections here, it was on around about 68 pips. So around about 68 pips, we closed a portion of our trade. So I normally advise to close at least maybe half or even 60% of your running profit if you're up 50 plus pips, and then let the rest run, because you don't want to give away to the market everything. So at least if you can close about 60% or 50% of your running trade and then close some. So we had a 31 pip stop loss. Let me just bring this up here. 31 pips. So at 68 pips, what we did, we moved our stops to break even, and then we took a portion off our trade. So as you can see, we had a lot of rejections here around the 1.09995 area. We had a lot of resistance here, and then here again had a nice big 3-pin formation. So we had price retrace all the way back almost to where we entered. And in terms of in terms of price action, as you can see here, we had an area of resistance here, and then we had that support, that nice spin on top, giving us rejection here. And then look at what happened on the right hand side. We had price come back again there with a 4-hour pin bar. 4-hour pin bar. You can see it. Oops, sorry. You can see price spiked that support and it pulled back up and it closed above this area of support, and then price just went forward. And can you see we had a 3-pin formation, 1, 2, 3 on support. So we could have taken another entry along these levels here. And let me see if I can pull up a fib. So that's point A, point B, up here, point A, point B. Can you see we had a 61.8 rejection, and then we had price just rocket all the way upwards, so achieving our first target, which was also which was also right there where we had anticipated our target in the before shot. Right, so possible re-entries could have been taken from that retest, but we held our trades from here, and then we just let the rest run, and then to achieve our 93 pip target. So our target was at these levels, yeah, at 93 pips, risking a total of 31 pips. So in terms of risk management and risk psychology, from a risk management point of view, this was a really good trade, and then we risked about 2 to 3% of the account size, and in terms of risk to reward is a pretty good one, because risking 31, gaining 93, just over 1.29 risk to reward. And in terms of trade management, I think this is one part where it will take a bit of practice, because holding a trade for this long does require a great deal of patience, and also after taking a trade like this, the biggest thing to do is to just wait for price to play out. The biggest mistake rather to do after placing a trade like this and wanting to hold for this long is to close your trade too early. That's the biggest thing that you can do, is to close your trade too early, and is also to move your stops too early. All right, so let me just explain the part of, yeah, and also one more thing, taking the trade at the wrong time and not waiting for the correct signs and pulling a stop too early. So let me just make an example. Let's say you missed an entry here and you only were able to enter at the pullback there. So you would have been in good profit of 56 pips, and you pull your stop to break even. Then look what happens to price. Price comes back again and spikes you out. You'll be seeing a lot of resistance, and you wouldn't necessarily jump back in the trade because you're not sure what's happening here. But when they give you further signs, they give you a 4-hour hammer, you could jump back in. But entering there would give you a better reward in terms of your trade than entering, than like your first entry being after this big breakout candle here. Right, so you could have taken more trades from here, and then you could have entered again here at the close of that hammer candle, and then also targeting that region there. So this is a pretty good trade setup. It did take long to play out, but that's the thing with swing trading, guys. Swing trading does take a lot of time. Some trade setups can even take 2 weeks to play out. Some can even take 3 weeks. Some can even take just 1 day, depending on the volatility of the market, right? So I hope this video does really help you. Right? Just to go over the pointers, like in the before shot, that gave me the reasons to take this trade. Number one, we had a head and shoulder pattern. We had price giving us the right shoulder, and then we waited for a 4-hour candle close to give us further signs of taking trade. And then secondly, we had a fib from point A to point B. We had a fib from point A to point B, right there, point A to point B, also giving us signs that we are bullish. And then in terms of targets, we used the beginning of the left shoulder for the target, right? So this head and shoulders, one of like the most useful patterns in Forex, and it plays out literally on every single currency pair. Right, so I hope this video did help you guys, and it will contribute to the success of your trading. Thank you so much.